Have you ever wondered how much Bitcoin it would cost to buy a house in 20 years? This is a crucial question, especially in a world where the real estate market and cryptocurrencies are changing dramatically. The common perception is that accumulating large amounts of Bitcoin is necessary to gain significant benefits, but today you will discover why owning even a small fraction of a Bitcoin, such as 0.001 BTC, could be all you need. Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find the latest market news, in-depth reviews of the most interesting projects and practical advice for making informed choices in the world of cryptocurrencies. If you want to stay up to date and not miss any news, I invite you to subscribe to the channel and follow us to keep up with this exciting sector. Before we dive into the details, it's important to understand how Bitcoin is changing the financial landscape. Bitcoin is often seen as a volatile asset, but that volatility may be its greatest strength. As the value of fiat currencies continues to erode due to inflation, Bitcoin is increasingly gaining ground as a store of value. In recent years, the price of homes has increased exponentially in terms of fiat currency, but in terms of Bitcoin, the situation is very different. 5 years ago, buying a house in the US or UK cost around 30 Bitcoin. Today, that price has dropped to around 5 to 6 Bitcoins, showing a significant collapse in the value of real estate relative to Bitcoin. This trend could continue, creating incredible opportunities for those who hold even a small amount of Bitcoin. Now, you might be wondering, why should I care about owning just 0.001 Bitcoin? Consider this: if the price of Bitcoin homes continues to decline, as they have in recent years, even a small amount of Bitcoin could secure you a home in the future. Imagine a scenario where an average house in Europe, which today might cost around 500,000 euros, rises to 1 million euros in the next 20 years due to inflation. However, if the Bitcoin trend continues as expected, that million euros could be equivalent to just 0.001 Bitcoin in the future. This means that even those who only own a small fraction of Bitcoin could have the purchasing power needed to buy a house. According to Peter Dunsworth, an investment expert interviewed on the daily podcast, Bitcoin Daily, the purchasing power of Bitcoin could increase to the point where you could buy a house with 0.001 Bitcoin. This is because Bitcoin is designed to be deflationary, unlike fiat currencies that lose value over time. If you're still not convinced of Bitcoin's potential, consider this: large institutions like BlackRock are accumulating Bitcoin at unprecedented rates. BlackRock, one of the world's largest investment managers, recently purchased 4,000 shares of its Bitcoin ETF, bringing its total to 16,000 shares. This is a powerful signal that institutions believe in the future of Bitcoin. Not only that, but BlackRock's Bitcoin ETF has seen an inflow of over $20 billion, indicating growing confidence among institutional investors. These movements aren't just random, they point to a trend toward mass adoption of Bitcoin as a global store of value. But what makes Bitcoin so special compared to other forms of investment, such as gold or real estate? The answer lies in its unique nature. Bitcoin is a digital store of value, not tied to any government or central entity. It is an international ledger, a register that transcends borders and is immune to the inflation that plagues fiat currencies. Unlike gold, which has practical uses in jewelry and electronics, Bitcoin is purely a medium of exchange and a store of value. This makes it ideal for protecting your wealth in an increasingly uncertain world. If you live in a country with an unstable government or a declining currency, Bitcoin may be your best defense against the erosion of the value of money. Looking ahead, it is possible that Bitcoin will continue to rise in value relative to real estate. Younger generations, such as millennials and Gen Z, are less interested in owning real estate than their predecessors. They prefer experiences and flexibility, and investing in Bitcoin offers just that. Why tie yourself to a 30-year mortgage when you can invest in an asset that could provide much higher returns in a much shorter period of time? For example, in Australia, buying a luxury home can cost up to $10 million, plus high mortgage interest and taxes. However, renting that same home might cost only a fraction of that, freeing up capital that could be invested in Bitcoin. This type of strategy could result in much higher returns than traditional real estate investing. It is also helpful to start thinking about the value of Bitcoin not in terms of dollars or euros, but in terms of real assets such as gold, land, or real estate. This approach will help you better understand the true potential of Bitcoin as a store of value. If 0.001 Bitcoin is worth around $65 today, it could be worth much more in terms of purchasing power in the future. According to Dunsworth, Bitcoin's volatility is not a problem, but a feature. It is this volatility that allows Bitcoin to grow in value over time. So, if you can get past your fear of volatility and think long-term, you may find that even a small fraction of a Bitcoin is more than enough to secure your financial future. In short, owning 0.001 Bitcoin may seem insignificant today, but in the context of the real estate market and the growing adoption of Bitcoin, it could prove to be an extraordinary investment. Don't let volatility or common perceptions put you off. Bitcoin is an evolving asset that could revolutionize the way we think about wealth and investing. With that said, thanks for watching, and until next time, remember, don't buy a house, buy Bitcoin. If you want to stay up to date on this topic, subscribe to the channel for more insights.